This time, let's discuss the Chinese economy. Recently, Chinese stocks have been surging and plummeting dramatically, fluctuating wildly. There is a specific reason for this, although it's hardly reported in Japan. So, let's talk about the factors to watch in predicting future stock movements. First, regarding the reason for the sudden rise in Chinese stocks, it wasn't due to any positive figures in China's real economy, such as improved employment or trade numbers. Instead, the Chinese government hinted at major economic stimulus, which led to large sums of money entering the market. Regardless of the real economy, the flow of money generated optimism, particularly among the wealthy, who benefit directly from these funds. People bought stocks, anticipating an improvement in the economy, which led to a sharp rise in prices. Here's a chart of the Shanghai Composite Index. The market, which had been declining, suddenly shot up, easily surpassing the previous high of May 20th. However, on October 8th, there was a large drop. Although unknown in Japan, this was triggered by an event in China. China has a government body, the National Development and Reform Commission, NDRC, which oversees economic policy. On October 8th, the NDRC held a press conference where journalists asked about the scale of economic measures and about the ongoing deflation. The head of the NDRC, a highly influential official, passed the question to the vice director, who ambiguously answered, suggesting the answer could be inferred from previous remarks. From the market's perspective, the lack of a concrete answer was disappointing, leading to a sell-off in stocks. Prior to this, rumors from sources like Reuters and Bloomberg had speculated on the size of potential stimulus measures, which had pushed stocks up. But with no details given, stocks were sold off. In short, recent fluctuations in Chinese stocks are driven not by the real economy but by speculation about government policy. Many people anticipated a large stimulus announcement, which boosted stock prices, but the lack of details caused a drop. So, why did the NDRC hold a press conference at this timing? One theory is that they aimed to take credit for the rising stock market, hoping their announcements would keep stocks rising. However, with no concrete details, stocks fell, which backfired. There is another issue. It's said that President Xi Jinping has concentrated power to such an extent that his close advisors are cautious, avoiding any measures he might oppose, which has led to delays in concrete policies. Xi has a history of opposing policies that lead to bubble-like conditions, which might explain the reluctance to stimulate real estate or the economy excessively. Therefore, recent fluctuations in Chinese stocks are not based on economic fundamentals but on expectations about government policy. If there's no impactful announcement soon, retail investors, who have been following the upward trend, may face significant losses. In conclusion, the fate of Chinese stocks depends on the next announcements from the authorities and whether they clarify the scale of stimulus measures planned for this year. Since the real economy in China is currently struggling, the stock market is moving purely on expectations surrounding the Communist Party's policies. While stocks rose due to high expectations, they have now declined in disappointment, awaiting further statements.